What we want to talk about today to you, I know you're working on your tax return these days, but you must know before you file your taxes, there is what we call the 2025 tax reset. There's a lot of things are resetting and setting differently. We want to make sure that you know what they are. You don't need to understand the technical things and the in and out. You just need to hear the buzzwords. You just need to sort of pay attention to the new form that you are filling up for 2025. That will give you good guidance. And this particular video, you can find it later on our YouTube channel, which if you missed any parts, you go to listen to that part. Or you can literally forward that to your tax preparer, tell your tax preparer that, hey, I got this video on internet, and can you take a look, make sure that everything it mentioned here is already reflected on what you did for me, right? Our channel at YouTube channel is what we call the do-it-yourself channel. We want to give you the knowledge without beating around the bushes. We just give you what we know, and you know what I know, and I'm teaching you right here so you can use it to your benefit. Then you don't have to pay someone to do your taxes. You can literally do it yourself, right? All right, let's get going with this. Prior to us talking about the content, I have like 3 slides I want to just quickly go through with you. One of them is about our website. By now, if you have attended our webinar number of times, you already know our website is communitycpa.com. But if you don't know yet, now you know. You can go to our website and make appointment with us right there, or become our client at any time during the day. Even if everybody fell asleep and you worked so hard, you have no time to talk to anybody during the day, you can become our client from our website to click that button called On Board with Us. That is where you can get your data uploaded, and you can say that, hey, Ying, I want to be your client. And we welcome you with both of our arms. All right, so this is YouTube channel, folks. If you go to youtube.com and you type in channel name, Community CPA, you'll come over here. That's kind of our banner. In different languages, we say welcome. And here you'll find all of our history videos, over 1,500 of them. And you'll find the videos are classified into different themes. So the first one you see is the estate is by alphabetical order, so you will find them. And if you want to see what we talked about today, is under the live session button. So it is like the third button on our channel. So that way you can look at whatever it was broadcasted this way to you. If you subscribe to our channel, you will always see what we will talk about. You probably will receive about 4 notices. I know it is a little more, but it's not redundant because there are 4 different webinars. We do a Saturday one, which is a little bit more content. And we do a Tuesday one, which we give the content that can be done in 20, 15, 30 minutes. Then our Wednesday and the Thursday is actually a translated content in Chinese and also in Spanish. So this is, why you receive 4. But you will know that by just receiving our videos notification, you will be at a front row in terms of knowing how economics in our country is going. I am not exaggerating because we have a firm with over 30,000 clients, and they're all business clients. What do these people tell us? They tell us how things are going. They tell us what question they want answers for. Those questions becoming our webinars. So you're always going to be staying at the front line in terms of the necessity of the financial side of information if you subscribe to our channel. Obviously, we're a CPA firm, so we're not entertainment center. You're not going to find jokes and entertainments here, but you'll find serious knowledge that really help you to organize your life, right? People always say there's only 2 things for certain. a human being would experience. Number one is death. We all live, we all die, so that's certain. The other one is tax. So what can be more important than tax, right? It's equivalent to death, so it is a must. If you know it is a must, why not give your best shot and subscribe to our channel and become our client. Here is the 2 books I wrote. I make a disclaimer here. These 2 books I wrote, the AI was not there yet. Today writing books is something different. And I realize that, and I'm actually using it as well. But this first 2 books is actually put together by literally typing every word in the computer. If I'm not good with computer typing, I would write everything already at that time. So for me saying that is to say there is a difference. When you read the book that is done by AI, or you read a book that is done by someone authentically themselves, you can tell the difference. So I felt I was looking at the 2 p.m. book that I'm doing, which is assisted by AI. I use AI to help me. But what I discovered is no longer me. It is the cartoon version of me speaking perfect English, but my first two books are not perfect. They are Chinglish. They are English combined with foreign accent. But then suddenly the 2 p.m. book become a real American without a slice of grammar mistake. I don't know. I really want that, right? So, this is the AI world, and you want to know that the AI, it is going to take your personality away. So when we do our webinars, it is a real person sitting here doing webinars. I'm not an AI model, but you see so many videos right now on the internet is done by AI. So recognize that you will give more human feelings towards to our channel. We don't run AI on our channel. So every single one, if we spend 30 minutes on our video, we probably spend an hour and 30 minutes to prepare it, to get it ready, and then to come up to do this webinar. So I just want to tell you that we are real people, and our heart is real towards you. We want you to become our client. We're not an AI marketing tool to just get you sign up, then you don't even know who you talk to, right? This business world is changing so fast. Sometimes I cannot help to think, what is the next phase of a professional firm? What do we become? Do we become an internet word salad, or we become a real person approach? Then you know us by first name. We know our clients' kids by first name. So that is the direction the firm is going. But I'll tell you that I will use AI, I will make AI do better job, but I will never replace my personal relationship with every single one of our clients. So that's our disclaimer. Like this one, no responsibility disclaimer for our webinars, but I'm talking about disclaimers to make sure that we always have that personal touch with you. Let's get going with our real content today. What I have here, the first section, I have several sections here trying to group that for you. So if you don't have a business, you just look at the individual family must know, then you're done. If you have a business, you go on to the business session, right? So let's get going on this one. So what is the new big 3 personal deduction? I want you, this one big, beautiful bill, this kindergarten language is kind of getting popular with the business world. Everybody is using big, everybody is using beautiful, everybody is using big something else, right? So I say big 3. There's a big 3. Number 1, no tax on tips. That is a big one, right? No tax on tips. If you are a waiter or a waitress at the restaurant, when you look at your W-2, you have a line that's tips, and make sure that this year your tax preparer need to put that number in there for you to make sure you don't pay taxes on it. Up to $25,000. Of course, with some limitations, depends on your other income, how rich you are on your tax return. So that's a big number 1, no tax on tips. Overtime, no tax, right? Overtime tax relief. So if you got your, I know this become the law in July of 2025. The year already passed from January to July, and your W-2 probably don't give you, your paycheck probably didn't really split the overtime or not overtime for you, or your W-2 didn't split that, it's put them all together. You need to know. So you can split that on the tax return. Just make sure that you can do that. Of course, if you are a professional folks and working, for example, the accountants working in the CPA firm, they're exempted employees, so they don't have overtime. But any other industry that you are not exempt employee, and you should have that applied to you. Just make sure you're looking into this deduction if you have overtime pay, right? Car loan interest. This is interesting. This is one of the big three. So interest paid on loans for new U.S. assembled vehicles purchased and financed after December 31st, 2024, which means January the 1st, 2025, right? Which means as the year 2025, if you bought a new U.S. assembled vehicle in that year, you financed it. So now you can deduct the interest expense related to that up to $10,000. Of course, if you paid in cash, you don't have that. But if you have an interest expense that you're paying, then you got a deduction. That is another one. So this one, you need to go to a new schedule called the Schedule 1-A. You will see it. If you use TurboTax, you will see that next to the Schedule 1 for you. There, you have to put in the VIN number. See, they didn't really say where you have to borrow money. You may borrow money from your grandma. I mean, as long as your grandma charges you interest, you can claim the interest expense, right? Of course, your grandma's supposedly to report that interest income if she did that to you. But all the grandma I know, nobody charges their grandchildren any interest. They're just like spoil them to death, and everybody doing the same thing. All right. So, of course, I did mention about that phase out, so which is just something I mentioned here, and you don't have to remember that. So when you do taxes, you just know that, hey, did I look at my big three deduction? So you want your preparers to do that, right? The other one, it is enhanced standard deduction and credit. So that one big, beautiful bill have raised the standard deduction amount unproportionally in 2025. It is a good gesture from President Trump telling you that I love you. See, I gave you more standard deduction. So here, the single is $15,750. The verified jointly is $31,500. And the senior bonus, if you're old, I hate that word of senior because I'm so close to that age. Sometimes I'm thinking I'm not senior. So who is senior? So senior is anybody who are over 65. So I'm not there yet, but obviously it's a number I could reach easily. And time just goes faster on my end. Maybe very slow for you, but for me it's just lightning. It goes so fast. So for seniors, other than the standard deduction they got $6,000 extra. Isn't that fun? So you want to make sure that if you got grandma, your parents who are over 65, maybe as a smart kid, you say to them that, oh, I hope your standard deduction is being, increased because there's a new OBBBA bump for you. That would be so cool, right? Child tax credit increased to $2,200, not by a lot, but a little increase. Adoption credit. This one I want to mention to you. Adoption credit has two parts. One part is they give you $5,000 period. Oh, this is not including adopting dogs and cats, okay? This is only for little humans. If you adopt a little human and little babies, and when they come to your household, even though you don't owe any taxes, the government would give you a $5,000 reimbursement on your adoption fee. They gave you that to pay you back through tax refund. But what if you say that, well, I paid $15,000, on this. That's okay. The portion that was not refunded to you, and that portion will remain non-refundable. But if you pay taxes, if you paid more taxes, it will still come back to you. So just so you know, the adoption credit only apply to little humans, because I have people asking about dogs, and obviously dogs are little humans. I really think they are. So I have two of them, so I totally understand why people always think about getting credit for the dogs. They're so expensive, right? And they're never going to be out of diaper because they're always on diapers. So babies are out of diaper in 2 years, the dogs will never. So you spend a lot more money on diapers, that's for sure. All right. Yeah, I'm talking about the bad behavior dogs. They never could get trained. I know my friend has dogs that are so good. They go outside to pee and poo and they don't need diaper. But mine, oh no, they need to be on diaper all the time. So they're two kind of babies, obviously. Trump account. I have a separate webinar videos in our channel. Talk nothing but Trump account. If you have children who are under 18 years old, why are you not setting up Trump account? I don't really understand you. You should. So make sure that you watch that video, okay? So you know more. But what I'm trying to give you here is that this is a one big thing for 2025 tax return. If you have baby born in 2025, President Trump gave you a $1,000 free money in your Trump account. Just make sure you set it up. The form you use is 4547. To help you remember that, 45 is that year, is a 45th president, that's Trump's first term. 47 is Trump's second term. There's nothing President Trump doesn't bear personal brand name. It's going to be Trump 1, Trump 2 form, and you know that, right? So you would remember this form. You can go to treasury.gov to get to set that up separately from your tax return. So you don't have to talk to your tax preparer for this, but of course you can. They can do that for you as well. But easiest, you just go online and get that set up yourself. If you have kids who are under 18, you can set up Trump account because they were born before 2025, so they don't have the 1,000, but you can put in $5,000 a year to your kid, and that money, when kids grow up, can be turned into Roth IRAs. And there's a lot of things. I want you to just go look at my videos, and so we don't spend time over here to repeat, but make sure this is a big thing. You should do it for your new babies and also the old babies, okay? All right. What about this? Capital gain and investment tax planning. There is a thing I need to mention to you, and it's a bad news because the government wanting people who make more money to pay more taxes. How did they do? They said that, we're going to expand this 3.8% NIIT tax. What is NIIT tax? It's investment tax is used to only tax on passive income, which means the passive rental income, the passive K1 income, but the active income, like your 1065 K1 active income or your business income, it doesn't get taxed on there. But they are taxing it now. They expanded what should be included in there to be taxed 3.8%. It is literally raised the tax rate from 37 up to almost 41%. So this is a personal tax rate here in United States of America. It's huge. So I just want to say that you in the past previously, if you were an active owner of an S corp or partnership, your share of the profit is exempted from the 3.8%. The exemption pulls only the active business income into the 3.8%. So, of course, for those who makes a certain high income, right? Often they cite that threshold as a $400,000 a year AGI. I mean, we have so many business people are over that threshold, 400,000. I mean, 400,000 AGI, I will say that 20 years ago, you don't see a lot of people with that. But this, dot-com boom followed with right now the AI new world. I mean, billionaires, millionaires is born on the daily basis. So 400,000, yeah, you see that a lot, especially people works with IT side of things. With certain crypto income, the IRS is tightening the net on digital assets, profit from crypto sales, as well as income from staking or yield farming and stuff are now specifically categorized as an investment income subject to 3.8% NIIT tax. So, it is basically become more of a peanut butter approach to everything now. In the past, they just pick and choose, right? So this is something you want to know, especially if your income threshold is over 400,000. You should know your taxes increased effectively by nearly 4% by federal government. All right, retirement contribution is also have some enhancement here. So the this is kind of related to an employee as an individual. So in the past, when you get a job, your 401k contribution was usually 0% until you tell the HR folks saying that, oh, I want to contribute 3% to give the maximum match to my employer match. You would do stuff like that, right? So now, for this OBBBA, no, actually, this one is coming from Secured 2.0. It is at the same time the Secure Act 2.0 came in July 2025. OBBBA came in at the same time. So so this one, what it says is that in the past for when you go to get employed, you don't really have to contribute to 401k. It is your choice, right? But this new law, now for the new plan, if your employer got into new plan, the default is you are in, which means as soon as you come in, become an employee, when you start the job, the company will automatically take 3% to 10% of your paycheck put in your retirement account. They don't let you make that decision anymore. Of course, the employees I know, like at our firm, some, we're accountants, right? So we're very conscious of the tax saving and things like that. So a lot of them are actually electing the maximum, which will be divided into 12 months. So they at year end they put in the maximum 24,500, whatever that become, right? So, but that doesn't apply to a lot of people, and they needed money, so they don't want to put in. The new act says that the company will just force you to do it. Every year, the company will have to raise the contribution by 1%. They will raise all the way to 10%. Okay? So that, of course, doesn't apply to everybody. If the company you work for is a smaller company, that doesn't apply to them. So there's a lot of exceptions. Generally speaking, the small business client we have, like if you're running any revenues under 1 million, you have 1 or 2 employees, and in that case, you don't need to worry because doesn't apply to company that has 10 or fewer employees. They're exempted. Okay, so newbies, if the business is less than 3 years old, they don't have to do this yet. So you still have a little bit of time to implement that. But 401k, that 2025 limitation was 24,000. So it is on the screen I'm showing you. So when you do your taxes for 2025, if your W-2 didn't have if your employee provide retirement plan, but you did not maximize to 24,000, then obviously you're paying taxes on it. But if you elect that to be maximized, then 24,000 come into your retirement account, and you don't need to pay taxes for. So that is what I meant to speak about related to retirement contribution on the individual side of the application. So this area, we kind of stop right here because we covered all the individual side of significance, like what you need to know if you are filing your 1040 with TurboTax, and just make sure that everything I mentioned here, it need to be a checklist for yourself. Make sure that you actually follow through that. Now, let's cover small business owner and the real estate. Of course, this is a section that if you don't have that, and you don't even need to get into, but if you have rental properties and you are small business owners, I'm proud of you. You are here because you want to do the right thing. So, the restored business incentives, that is the big heading to, is highlight of Trump administration. That 100% bonus depreciation is coming back. So, but it's coming back. It's not like coming back on the January the 1st, 2025. It's actually coming back on January the 20th, 2025. What does that mean? That's the inauguration date, remember, folks? So if you bought your property before on January the 18th, 2025, you need to blame that on President Biden. But if you bought it in January the 20th, 2025, you need to write a thank you note to President Trump, because that is why, and this divide is so weird, it's right on the inauguration date. But you need to remember that. We need to follow the rule, right? So if you're my client, and I hope you didn't buy a property between January the 1st and the January the 18th, and thinking that President Trump will restore a bonus depreciation because you read his mind, but you forgot that his mind only stopped at the date that he took over the power. So this is something, it's good, but it's weird. So you need to remember that. R&D is coming back. R&D, it is all good. So if you are in business and you are doing research and development kind of work, like people, putting together a brand new engine, like Elon Musk did the electronic car, and you should read Tesla's financial statement, which is public information, and how much of R&D it was there. So R&D, big or small, and it saves you taxes. So if you ask me that, Ying, what is the R&D going to save me? I can never really give you a real number. It is not as simple as you have $100 R&D, you get $10 of tax credit. It's not that straightforward, but you can think of that way. You can think of such a way that, if I have $100 R&D expense, I get $10 back as a tax refund, but I have to add the $10 into my income to be paying taxes on that $10. So you can think simple, but what the bottom line is, it saves you taxes. And it doesn't expire. It doesn't, if you have R&D and you didn't claim it, you don't have any taxes you paid, so it didn't come back to you. But next year you paid more taxes, then it will all come back to you. So it works that way. And Section 179 is also expanded. That just says that if you bought a big machine and up to 2.5 million, you can write it off to zero. And I know folks always ask about Section 179 versus bonus depreciation. What's the difference? Why are you separating them? Why can't they be the same? So they're not the same. But one thing I will tell you is, I will make you remember, in business, when you do bonus depreciation, you can create a loss. But when you do Section 179 depreciation, you cannot have a loss. So that's a big difference. If you have S corporation, you have a loss, you reduce your W-2. But if you have S corporation, you use 179, you cannot create a loss. So that would not reduce your W-2, right? So those are kind of fundamental, most important difference between the two. Of course, there's many other things. This one made permanent. That is the 20% deduction on pass-through. This is the QBI, right? Famous QBI. Believe me, I have seen the tax return done by E&Y. I named them because they made that mistake. They completely forgot about QBI. And on their tax return, their billion-dollar clients didn't have QBI calculated. So interesting, right? So that is not something people don't forget. I'm just saying that everybody make mistake. That's okay. But you as a taxpayer, you want to be the one that with that checklist. Did you do this for me? Did you do that for me? So that way you help people who does taxes to not make mistake, right? So that is the permanent QBI, 20% deduction coming through. Pass-through entities. This one, pass-through entity has a lot to do, entity tax, this is PTT, has a lot to do with the Schedule A SALT workaround. And you remember before 2025, during Trump's first term, he made a rule to tell people that on the Schedule A, you can only deduct $10,000 taxes. That include income tax, property tax, other taxes. So the taxpayers, the families, can only deduct $10,000. You can imagine if I am a California resident, California state taxes is like 13% and then I make a little money, I pay a lot of state taxes, but only 10,000 will be deductible from your Schedule A. So that was Trump 1.0. That's what he did. So on Trump 2.0, and he changed his mind, he raised that 10,000 to 40,000. So, now some more taxes can come in. I know the state with the state tax residents, you will get a little relief out of this. So in 2025, make sure that you watch your Schedule A tax section. Make sure that it's more than 40,000. Okay? If it is less than 40,000, something wrong with you. So you want to look into that. Because this 40,000, including state income tax, property tax, local income tax, you pay more than that, generally speaking. So because that was limited to 10,000 at the time, since Trump 1.0, now going through Biden's 4 years, so the state worked what we call the workaround, that is PTT. So that PTT still exists. What PTT does for you is, for the pass-through entities, the state allow the business owner to pay taxes as a business expense under the business, then take the credit over to 1040 and are seeking for refund. So it is actually a pretty beneficial, lucrative maneuvers that business owners should be doing. If you have if you have S corp 1065 and you make a lot of money through this entity and you sit there goes, I don't know what you're talking about, I don't understand PTET, then you probably missed out your golden opportunities. But 2025, that is still available. Some state will work it out because now it went to 40,000, so they may feel like there is no need for workaround anymore. So I just want to make sure that you understand that the two are sort of related. Is a cause and a result. So it is because of what Trump did in 1.0, the state come up with a fix. So that fix is PTT. So now, it is still not like before, right? Before there's no limitation of 40,000. So I'm thinking that PTT will still stay. So we'll see. But right now, 2025 is still there. All right. Real estate cost segregation and bonus stacking. 100% bonus plus cost segregation, that should help you. And the best value purchase price, 500,000, and high personal income, high tax bracket, and then you will generate the best value if you could do accelerated depreciation between 20 to 40%. So let me explain to you about this cost segregation, this word. I understand what means word salad. Sometimes when you listen to legal jargons or the CPA people's jargons, they show up like tasteless salad. They don't mean anything, they're just salad, right? Word salad. And because I have this language learning process in my life, I learned English, after, it's not my first language. So I learned English, along the way. So when I learn English, I know some words don't make any sense. For example, equity. Equity is a word that I still don't have a very accurate translation for myself into Chinese because that word do not exist when I was growing up in China. So it's not a word there. It was a communist society, so equity is capitalist. So it's not some word that would be taught in elementary school and middle school. So I don't have that kind of exposure, so I don't know that word. But in accounting, taxes, when I came to Canada and US, it was used every day, right? So I don't understand that word, so I never really could use it is so flexibly. It's like my own feelings and my own senses can attach to it. So a lot of time, like this cost segregation, to many people, that means nothing. What do you mean by cost segregation? It is a word, but it doesn't mean a lot to you. Let me just break that down for you so you understand what that is. Cost segregation report. It is a piece of paper to tell the tax people how to depreciate the building you bought. Okay? When you bought a building, that building shows up with a piece of land, with a structure, with the inside of things for the structure. So they are all different lifetimes, right? The land will never die, so you don't have a time limit. The building structure, if it is residential building, is 27.5 years. That's what IRS believes. So then you depreciate for 27.5. The inside of everything depends on what they are. They would be should be replaced 15 years, should be replaced 20 years, should be replaced 5 years, right? So all of these is called the segregation of your purchase price. I know the cost is just so confusing. It should say purchase price segregation report, right? So once you got that, you will know that there are so many ways to get it breakdown. You can hire an engineer to look at all the components, give you the breakdown. You can hire a business advisor to give you an accounting breakdown based on the accounting regulations and common sense and common rules, experiences. So you could get report from engineers. You could also get a report from the business consulting groups. So with that said, you want to know that if you bought a property, you should look for cost segregation report, and the engineer report price tag is probably at about $6,000, $8,000 per building. The accounting cost segregation report probably priced at about $2,000 per report. So there is a difference. There's a different involvement, but both reports are working for taxpayers. So if you paid the money, got your report, you should be good for giving that to your tax preparer so things can be done for you properly. This is one of the biggest tax saving you can implement if you bought a investment property in 2025. 1099K. So in 2025, okay, this is 2025. We're talking about 2025. So for your 2025 taxes, the form you're going to receive on 1099K, so that only will be triggered if you meet both of the criteria on the single platform, which means for Venmo or for PayPal, but it's not combined. It's like for single platform, you will trigger. Number one is gross payment is over 20,000. Number two, transaction is more than 200 of them. Okay? Folks come to us always say that, Ying, that is so problematic because I meet the threshold, but majority of my income is really not business income, it is personal. Then you just need to exclude that. Okay? So when you work on your taxes, you need to work on deselect functionality. So that should be in the IRS form for you when you are putting in Schedule 1A, and there will be a area for you to deselect what doesn't belong to here. All right. That is what I want to mention to you about the business side of big deals for 2025. And there's a couple of filing logistics I think is also important. Number one is no more paper checks. Just know that IRS strongly encourage direct deposit, okay? By paper refund checks, paper refund checks is still available, but they are really cutting away from that. So just try to be a little more open, I know that nice paper check is kind of fun to have it, right? With the statutes and the quality of the paper is different. It just looks so enthusiastic, right? So now you don't have that, and you just look at your bank. Find an enthusiastic bank to deposit your money. How's that? So that way make you feel better. And a digital asset, the new form 1099-DA is coming up, right? So you need to know, you have to report on that. The local sales, local state, local tax, property tax, this cap is changed to $40,000, like I told you. You can only take the $40,000 deduction if your income is under $500K. So you will find out that when you start running your taxes, those thresholds, the software developers are pretty good. They put that in for you, so you don't have to, generally speaking, you don't have worries about that. The system will keep you there. So this one is a Schedule 1A reporting flow. I want to show you this because this is one big form that new in 2025. The 8Z connection over there for 2025 filing, most of these new above the line deduction are actually aggregated on the Schedule 1A. And then you brought over to the Form 1040 line 8Z. So on your 1040, you see that already, but it is triggered from your Schedule 1A. If you see a negative number on the line AZ, that usually is a good sign. It actually means that you took advantage of OBBBA deductions really well. That worked for you, okay? So just be aware it is not something, if it is negative, you should be okay, so not to worry about. I know you don't normally see negative on the first page, but this is the one. All right, so that is about the Schedule 1A. Then I just want to mention a couple of small things. And where do you put the bonus depreciation? That's on Form 4562. And your R&D, that is normally, if you are running a small business, then it's under your line 27A under Schedule C. Okay. Final takeaway for 2025 tax filing, you must know. This is the greatest structural rewrite of individual tax deduction since Trump 1.0. But nearly every benefit now came with documentation requirement, like income phase out, audit traps, smart planning, not just filing, it is now essential, right? So you want to make sure that you are taking certain advantage on the deduction. On the other hand, you need to have your documentation requirement put together. So someone was asking me, how much audit IRS would do, I would say that overall the IRS budget for audit is not increased. If it is not decreased, it's for sure not increased. And then IRS obviously can focus on small businesses, right? That's the low-hanging fruit. You guys don't know a lot, and we just audit you a lot. And when we charge you, you don't know what to do, so you pay. So a lot of our small business owners, when you receive the IRS audit letter, and stop hiding it. Just don't panic and bring it out. Find someone you can trust to have them represent you. I'm not saying that you have to come to Community CPA. You obviously can trust us, but you may know your brother-in-law and who is a lawyer and your sister-in-law who is the accountant. You find someone who would put their body weight on your case. It is very easy to find a big company and they charge you a lot of money, but who they assign to your case might be someone, not even better than your brother-in-law, right? So you want to make sure that whoever you give that to and their body weight is on it, so they really fight for you. That's really, I don't know what else, what other comments I can give you, because everybody charges the price they want to charge. So what you are judging is really about how you feel about this person and this company. Are they going to give the very best to you? So that is 100% your judgment. All right. To conclude, I want to introduce to you our partners. So you see me there, and then Dr. Hao, Dan, Derek, Song, and Juan. You can book our time online. If you go to communitycpa.com, the appointment is open, so you can book our appointment. Although we do have a discovery call, which is a free online appointment. Other online appointment is all chargeable, so you will pay a fee before you see us. But I will tell you that we don't have anybody who come back and says that 1 hour I spent with Ying is such a waste of time and I need that money to be refunded. Honestly, nobody ever done that. If they do that, I would refund. So I want to say that our service quality is there. We answer your question, and English is our second language. What that mean? That means we don't know how to run around the bush and trying not to get to the point. We only know how to get to the point. So that's actually a benefit for people who are seeking for professional service. So let's conclude right here, and I will see you again on my time on internet. In this channel is Tuesday 3 p.m. and Saturday 3 p.m. I'll see you again and again. Subscribe to our channel. Thank you. Bye-bye.